Hi and welcome back to Credit Conversations. Today I'm joined once again by Mark England. He's going to talk us through the latest commercial credit lending trends. But before we get into that, Mark, what is the backdrop like economically for UK businesses at the moment?
So when we last spoke, Jean, I think we were in a point where there was still, the market was still quite frothy. There was still a lot of growth coming through in lending. GDP growth in the first quarter was strong. There were a lot of warning signals out there, a lot of concerns around the impact of a mixture of tariffs, national insurance changes, rises in national minimum wage, and how that would play through. But in quarter one, it was a reasonably robust market. Now we've moved a little bit. A lot of the things that we were expecting to happen are playing through. So the pace of growth, firstly, has dropped out of the market entirely. We've had negative GDP growth in the last month. Still expecting it to be flat at the moment over quarter two, but it's very, very clear that we've moved from a faster growing environment to a slower growing, more subdued economy. We are expecting to see increased inflation, and that is actually coming through at the moment. And we're also expecting unemployment to tick up marginally through the course of this year.
So does it kind of feel like maybe we're heading towards another period of uncertainty, perhaps?
To a point, it's important to say at the moment it doesn't look like we are entering into a contracting market. Underlying confidence, both on a consumer and business side, is fragile, but not as bad as some of the headline metrics might make you think. For example, business confidence over the last 3-4 months in the ONS's Business Confidence Survey has been ticking up marginally each time. In the latest stats, the businesses that are reporting concerns, it's dropping across almost every indicator. The one that we're still keeping a close eye on is consumer confidence and what that means to spending. Businesses are signalling that to an extent in some markets falling demand is an issue. So it's certainly not a boom environment, but it's not a bust environment either. Whilst the market has become more subdued, it is just subdued.
So it's like a balanced confidence going forwards.
Exactly that, yes, yeah. Some risks out there, some key risks in terms of the consumer confidence in particular, but at the same time, nothing is flagging red in terms of tipping into a contracting market.
So what does that then mean for the business lending market?
So just as the economy's become more subdued and growth in the economy's become more subdued, we're seeing similar trends coming through in commercial lending. So Q4 and Q1, very, very strong periods of growth in lending. Long running story has been the way that the market has diversified, and that's still a factor there. Over the last couple of quarters, it was also the case that we were seeing increased lending from traditional lenders coming back into the market, more confidence. In the latest quarter, that's moderated a little bit. So the pace of growth in demand, so looking at search activity, has been flat on year on year. The pace of growth in lending at a headline level has also been flat year on year. When you look underneath the headline level, there are some interesting movements though. So it is true that asset finance as a market is contracting slightly. So I think it was down 1% by volume and 4% by value if we look at the latest month year on year. So there's absolutely a decline in lending in that market, but that's offset a little bit by growth in mortgages, almost exclusively the buy-to-let activity or the transition of buy-to-let activity into corporate entities.
So you've talked about some traditional products. How are lenders now looking at their own product innovations to help stimulate that growth a little bit more?
So it's definitely the case that there is a wider range of products out there to businesses, particularly if we're looking away from mainstream lenders. And that's manifesting in the introduction, for example, of more commercial buy now, pay later type products. We're certainly seeing at the bottom end of the business loan market, for example, substantial growth in lending on those types of products. You look a little bit further up the spectrum and you see very targeted lending going on to certain sectors, certain types of businesses where lenders are specialising or rolling out products that are catering for that specific market.
So you mentioned sectors there. Where are we particularly looking at the moment? Who's seeing growth opportunities and who's having a little bit more of a challenging time?
Well, I'll start with the challenging time. If we look at accommodation and food services, for example, and manufacturing as well, these are both sectors where we're seeing clear signs that companies are struggling, or it's certainly a more challenging environment. We're seeing a slowdown in the pace of employment, seeing more redundancies in certain sectors. Those sectors at the other end of the spectrum, though, there are one or two sectors where we're seeing some signs of growth. Construction is at a headline level. If you track the PMIs, construction at the moment is still reporting a score below 50, which means that it's indicating it's contracting slightly. But at the same time, we're seeing quite extensive growth in lending to small construction companies, small to medium-sized construction companies. So there's growth happening that may be an indicator that the government focus on house building may be starting to drive some investment for growth in that particular market.
Great. So we've got government investment in construction particularly, but how about business investment elsewhere? How's that looking going forward?
It's a bit of a mixed message, if I'm honest. So if we look at business loans in the round, it has been a growing market. So that's, as with mortgages, that's a form of lending where we're seeing stronger year-on-year growth. I think by volume it's up 20% on where it was last year. By value it's lower, and that value and that distinction between volume and value gives us a bit of a view as to what's happening within the market. So we are seeing a drop, or at least stability, in the very high value lending that you traditionally link to investment cases. I think it's probably fair to say that businesses do appear to be pausing those bigger investment decisions while they take stock of the uncertainty that's in the market. What has been notable, though, has been an increase in lending in what I call mid-value business loans, and it is a bit of a grey area. So this is lending that could equally be focused on working capital, but it is the case that we've seen growth coming through within that mid-market business loan as well as the bottom end over the last quarter.
So with all that in mind then, Mark, what should we be looking out for across the next kind of 6 months, and what do lenders really need to be mindful of when they're doing their assessments?
So there are three things I can think of that certainly we're keeping a close eye on over the next 6 months. Firstly, there is the extent to which we continue to see product innovation in the market. So we're working quite closely with lenders at the moment who are exploring how they can dig into effectively some of the underlying components of the market. Where is that growth really coming from? So that analytical innovation is one key area. A second one, and it may be a little bit too early to read anything into this at the moment, but will be to monitor and look for any early trends that indicate that the government's industrial strategy is starting to have effect. I think 6 months window is probably too soon to realistically see anything come through in that time scale, but nevertheless we're looking for those green shoots. And then the final and important one is bearing in mind it's a tight economy and a tight environment, looking to see and make sure that credit performance continues to be stable, so that delinquencies are holding steady, we're not seeing breakout risk, and that companies are continuing to manage and proactively target debt within their books constructively.
Okay, so it sounds like we're moving back into a place of muted growth, but the opportunities are still there, and really if lenders are keeping a watch on their market, who they're lending to, and getting a full picture of who those clients are, then there is still strong opportunity there.
Absolutely. It's going to be an interesting 6 months.
Yeah, great. Well, thanks for joining me, Mark. We'll be back next time for another Credit Conversations. If you want to hear more about these commercial lending insights, you're welcome to join our Commercial Insights webinar forums, which happens on a quarterly basis. Check our website for more information.